All right, welcome back. This festive season, all that glitters is not gold. Well, silver has always been a practical metal, a utensil in Indian homes, a coin in a festive gift, and an invisible conductor in your phone and solar panel. But in 2025, that utilitarian metal suddenly found itself at the center of a global squeeze. Tonight, we explain why India, the world's biggest consumer of silver, ran short of physical metal ahead of the festive season, and why that shortage reverberated all the way to London, the traditional clearing hub for the world's physical silver trade. On your screens, you can see people lining up in Zaveri Bazaar of Mumbai. Zaveri Bazaar is a jewelry market and a major hub for B2B and B2C jewelry industry. Here we can see that a market with the muddle of narrow lanes and dotted with hundreds of jewelry shops is overcrowded due to people lining up to buy silver on the occasion of Dhanteras. But in the heart of India's bullion market, a crisis of availability has taken hold. Jewelers have stopped accepting new orders. India's silver market ran out of stock for the first time in history last week, and the premium on physical silver has spiked to an unprecedented 12%. The premium is the cost to secure actual silver bars over the paper price. Well, the craze of silver this season has been unprecedented. For example, Sarthak Ahuja told his nearly 3 million followers that silver's 100-to-1 ratio to gold made it a smart buy. His video went viral during the Akshay Tritiya, an auspicious day for precious metal purchases. Silver prices ratcheted higher over the following week on 15th October, reaching never-before-seen highs of Rs 190 per gram. It was only Rs 133 last month, jumping in almost 43%. On your screens, you can see the prices of per gram silver last year, this month, and the ongoing continuous soaring of prices in the past week of silver. Well, the ripples of India's crisis culminated in a full-blown market panic some 7,000 kilometers away in London, the world's hub for wholesale over-the-counter precious metals trading. On your screens also, you can see a rather urgent meltdown of the London silver market. The buyers and the sellers panicking online, indicating shortage and a silver squeeze. By early October, London vaults were largely sold out, and borrowing costs for silver shot as high as 200% annualized. Well, London is the central point for global clearing and the home of the London Bullion Market Association, which sets global standards and maintains the largest commercial vaults. But this silver shortage is not only because of frantic demands from India during the festive season, rather the reasons are multifold. First is structural supply deficit of silver. A substantial majority, approximately 70 to 80% of global silver production, is a byproduct of mining for base metals like lead, zinc and copper, as well as gold. This makes silver supply heavily reliant on the economic viability and production levels of these primary metals, not silver's own price. The silver market has indeed been characterized by a structural supply deficit for several consecutive years. In 2024, the global silver market recorded a deficit of 148.9 million ounces, marking the fourth year in a row where demand outstripped supply. That means silver supply cannot be quickly ramped up when prices spike. Mine operations don't simply switch to more silver, the way they might increase targeted output of a dedicated metal. Second, the role of exchange-traded funds for the ETFs in silver squeeze is critical, transforming the metal from a physical commodity into a mass-market investment vehicle. A silver ETF is a financial product that allows investors to buy shares representing a claim on a certain amount of silver, physical silver, stored in a professional vault, such as those overseen by the LBMA. This mechanism democratizes silver investment, making it easy for millions of people to buy and sell. Since the start of 2025, ETF investors have hovered up more than 100 million ounces of silver. It relies on imports to meet more than 80% of its demand. In the first 8 months of 2025, silver imports fell 42% to 3,302 tons, while investment demand, especially from ETFs, soared to record levels. This surge absorbed the surplus import in 2024, creating a shortage that now needs to be met through additional overseas shipments. And third, traders shipped over 200 million ounces of silver into New York warehouses early in the year to avoid potential tariffs threatened by President Donald Trump. They feared silver would be hit with new import taxes, so they rushed to move the metal into the US before any levies could be implemented. Additionally, the market has been further strained by a surge in silver shipments to the United States after its inclusion in a draft US critical minerals list in September. In short, India's shortage is not just a local story of festive buying, it is an illustration of a globally interconnected physical commodity market. Cultural buying, rising industrial consumption, and surging investment flows expose structural inflexibility in supply. The result: temporary scarcities, elevated premiums, and a reminder that when physical markets tighten, price ripples travel fast, even to London, the heart of global bullion trade. For viewers who follow markets, the lesson is clear. When a metal is both an industrial input and an investment vehicle, shortages become financial events as much as physical ones. We'll get some perspective on this from our guest, Mithali Nikore, economist, is with us on the platform to talk more about this. Mithali, what do you make of this craze, for the lack of a better word, for silver? Of course, a few things are very clear from that opening monologue that I just enunciated to my viewers and to you as well, that silver cannot be mined. It's a byproduct. That's number one. Number two, it's going to be used in semiconductors. It's going to be used in solar panels. It is the technology of the future, and that, mixed with the scarcity and the rarity of silver, makes for an explosive commodity to invest in. Does that mean, that's my first question to you, does that mean that silver will always be bullish?
So firstly, I think, Vineet, I must congratulate you on such a beautiful research piece that you've just told the viewers, because it covered so many good angles of, the industrial investment and the consumer craze. And that also, highlights the role of influencers, because a lot of financial influencers, even if a metal probably is not doing so well. I'm not talking about this particular instance and this particular situation, but in general, it shows us the power of influencers, pushing people towards investment in specific products, commodities, and specific even shares, ETFs, etc. Because the minute a influencer tells you that, oh, silver is going to be showing better returns than gold, maybe you're going and investing in silver. And at the end of the day, when we look at the actual numbers, right, and when we look at the actual base value of the metal and the exchange value of the metal, it is definitely going up, but it is nowhere near gold as a store of value in its, in its actual basic, stripped down to the numbers. So I think what is very clear is that there's a combination of factors here. There is some influencer activity that's going on top of that, it's the festive season, GST cuts, etc., in the domestic market. But also what is very evident is the fear of the Trump tariffs and the way the fear of the unknown is driving the markets, because at the end of the day, when you need silver for the manufacturing of industrial commodities, and if there are levies that are put on it, even the threat of tariffs is driving the market to act in a way that is creating this, scarcity, which wouldn't have existed in the absence of the Trump tariffs.
Mithali, what do you make of the future of silver? Is it continue? Is it going to continue to be a good investment, or do you think this is a temporary spike and is going to be consolidated and corrected over the next few months?
No, I think the silver rise is going to continue for sure, because see, there's also a very interesting trend that started in India, but it's now spreading to a number of emerging markets, and it's even spreading to the UAE and through Dubai, which is to bring in the 9 carat gold. I mean, if I mean, when we were younger, or when we looked at the gold markets, we've been studying the gold markets. We used to think that 14 carat is one of the lowest purity of gold that is available available in most of the gold stores. But over the years, I've been noticing that there's been a very huge diversification even in the gold market, and we now have 9 carat available for people to invest in semi-precious gold, and that's one of the fastest growing gold categories. Now we see the same thing with silver, right? The prices of something which is 9 carat gold is just a little bit higher than the prices that you're coming in with pure silver. And I do think that we'll start to see many categories that come in even on silver. And I feel like silver, because it gives higher returns than gold or platinum, platinum is also actually doing well. And platinum is also a very important metal for the aerospace industry and for the airline industry, for the manufacturing of aerospace equipment. So platinum also falls in that category, but because it's so much more expensive, we are not seeing that kind of a surge on platinum from the consumer side yet. So I definitely feel that silver will continue its good run, but so will 9 carat gold, and we'll start to see these very nice small cap investment opportunities come up for smaller investors as well.
All right, Mithali, always a pleasure having you. Thank you so much for those insights and perspective. We take a short break now. Be right back.